All right, well, next guest has actually been calling for rate cuts for some time now. I want to bring in now RenMac, head of economic research, Neil Dutta. Neil, of course, the headline of these massive revisions, sort of, I don't know, the media reaction kind of bugged me because there's other issues besides the so-called politicalization. When you saw the jobs report, what was your take, your initial take from that? And mostly the revisions. What did you feel like? Because you already were calling for rate cuts.
Yeah, I mean, I think it largely confirmed my priors. Forget the revisions. I mean, look at the parts of the report that aren't really revised, right? Like the household survey.
Right.
You have college-educated unemployment basically at levels we haven't seen since, in a long time. I mean, the level at the moment is basically where it was in the middle of 2008, okay? So, that really undercuts this idea that immigration is the reason why the unemployment rate is flat. Right, labor force did a bunch of bachelor's degrees come over across the border, right? So the fact that the college unemployment rate is going up, I think, is a problem, and it's also a problem that the breadth of hiring is also very, very weak, and that you saw that in the payroll survey.
So I was talking with the prior guests. We were talking like the first Fed rate hike and the pace, job creation slowed. The GDP number, real GDP has slowed, and I just don't understand why, in my mind, Powell. I know he wants a soft landing, didn't sort of declare victory over the last couple of months.
Well, I mean, I think he's worried about what tariffs are going to do to inflation. He basically told us that. He said as much.
It felt like 6 months ago, I heard him somewhere say tariffs were a one-off, like Waller. He said they were one-time price hike and that was it. And then I know who got in his ear. He gave that speech in Chicago and he did a 180 turn. No,
I mean, I think it's right to assume that it's a one-off shock to the price level, particularly because, incomes are slowing, so people don't really have the wherewithal to absorb the price increase. But I think they're just fighting the last war, right? I mean, basically, we had supply shocks and so forth, and so we don't know whether if they put tariffs on, will that create sort of spiraling effects and make the inflation more persistent? I will say that if you look at surveys of inflation expectations, even as everyone's been worried about inflation, those surveys have been pointing to lower household inflation expectations, lower business inflation expectations, which should give you more confidence that you can follow through with rate cuts this year.
One thing you've pointed to is the housing market, but there are folks out there say, well, rate cuts won't, the Fed can't affect housing. So what do you say to that?
Come on.
I mean, people say that, they come on the show and say, well, the Fed doesn't control mortgage rates.
I mean, they don't control mortgage rates, but longer term interest rates are expectations of short rates. So if the Fed, if the market prices in more rate cuts, what do you think will happen to mortgage rates? We had a big drop in mortgage rates today because the markets were pricing in more rate cuts. Yeah. So
no, I agree with you. I just wanted you to say it because let me. So obviously over the weekend there was a lot of chatter who will replace Adriana Kluger and. Based on your strong track record, by the way, this is going back to 2009. Bank of America Merrill economist Neil Dutta steps out of Mr. Rosenberg's considerable shadow to proclaim the Great Recession is all but over. This was an article that was doubting you. A lot of people doubted you, but you became something of a superstar on Wall Street after this, and now people are saying, hey, you would be a natural fit for this job.
Well, that's very flattering. But, look, I mean, I do personally think the Fed could use more business economists amongst their ranks. I mean, sort of get out of PhD groupthink. To me, the Fed job really is a forecasting job. You have to kind of pick your spots with the consensus and just make the best decision you can based on the available information.
Do you think, though, with all of this focus now that maybe no matter who gets the job, they'll start to say, hey, we can revamp the tools that are available to us?
Well, people are doing that. I mean, for sure. I mean, Jim mentioned using the withholding.
People are doing that, but will the Fed do that? It feels like they sort of circled the wagons around the status quo.
Well, I think there are staff economists at the Fed that are trying to make the most out of these alternative data sources. I do think that already happens. Right.
And so how many cuts now are you expecting, or do you
I mean, the market's at 3. I mean, I think that's a reasonable baseline. I mean, I think they go in September, and, I don't think it's going to turn around right away. So I anticipate that they'll be going at every meeting for the rest of the year.
Do we avoid recession?
I don't know. I mean, I think my own view is that a lot of downside's already been kind of put in motion, and we should expect additional trade skirmishes over the rest of the year. We have the Section 232s coming, for example, so that uncertainty isn't going away yet.
All right, Neil. Well, let me shake your hand before you get that gig. Will you come on the show if you do?
Absolutely.
All right, my man. Thank you very much. Appreciate it.